In terms of the biggest challenges in 2024 and beyond, I touched on this one a minute ago, but the cost of construction and labor is just insanely high. There's been a lot of global supply chain issues and question marks around tariffs and whatnot. So the cost of inputs is generally higher. And as the cost of materials goes up, contractors say, hey, if materials are higher, I should raise my prices too. And then kind of from a double angle, you're getting higher materials and labor, which means the cost of construction has just gone up 20, 30, 40, 50%. It's kind of crazy to see. So if you do have renovated product, or if you buy a stabilized asset, you save yourself a lot of the headache with the new regulation and the cost and et cetera. And I think that's a benefit of the renovated product. Another challenge from 2024 is the tough financing environment. So not just interest rates being high is a problem, but the fact that it's so tough to get a loan. Banks are turning down a lot of people. Underwriting is just insanely difficult to get through now, and there's just way stricter requirements, et cetera. So it's way tougher to actually get a loan and feel confident doing a deal. The flip side of that is if you're an all-cash investor in this environment, you're going to be competing with kind of less abled parties. You're going to be getting better deals, and you're going to avoid all the hoopla of having to get a loan. So people that are all cash, some of our best clients right now, are just getting stuff 15, 20% below market, if not more, and just placing deals with strong terms and buying them all cash. The other big risk and factor is insurance. It's skyrocketed across the board, particularly in markets like California. So California, for instance, State Farm actually left the market. They're having a tough time underwriting some of the hazard risks like earthquakes, et cetera. There is even just an earthquake today in kind of Northern California, a little bit far away from here though. So between the natural hazard risks like hurricanes, et cetera, and then also the risks with some of these older buildings, like the Zinsco electrical panels and whatnot, a lot of insurance companies have left the market. They don't know how to price certain assets, so their premiums have just gone way up. So that's a big risk overall. The next one is rent and vacancy control. So this is people trying to limit rent increases in the market and managing how sellers can actually lease up their vacancy as well, and capping what that can be increased at. This was on the ballot in California with Prop 33. Fortunately for investors, that was voted down. People voted no. It was the third time in the ballot in the last 10 years. And what that was trying to do was repeal the Costa-Hawkins Act, which would have opened the door for vacancy control in California, and it would have opened the door for a lot more rent control initiatives and given a lot more flexibility to cities. The good thing for why this wasn't implemented is it keeps multifamily as a good investment and a good way to spend money, because if you're able to put money into the deal and increase the rents and increase the value, it makes sense. But if you're capped at 2% every year, then maybe there's very little incentive for you to renovate the building. And that's how you get, slumlords and less supply on the market, et cetera. So I think that's a good thing that California voted no. And I think California is a proxy for the US in a way with some of these more progressive initiatives and kind of tenant-friendly initiatives. So that was voted no, but I think it's going to continue to be at the forefront of discussion. The final thing that's a big challenge is just more red tape and more taxes overall. I feel like the government's always increasing taxes, whether it's the local level, the county level, or nationally, et cetera. So there's just a lot more regulation, a lot more rent registry reports and hoops you have to jump through to be able to do a deal. So on balance, I think that's why we've seen a little less activity year over year, is because there has been this challenging environment and it's limited some of the upside in multifamily overall. I still think that with the year we're coming into and rents coming up and some of the positive vectors, I think 2025 will be a big year. But I think these were some of the big challenges that were being faced.